Question 1. 45 marks, 54 minutes. Let's begin by looking at question 1. I would like all of us to go immediately to the required. So we have in the required. If we look, we have 1.1. Calculate Kate Willow's taxable income for the 2014 year of assessment for 34 marks. So already, the moment we read calculate Kate Willow's taxable income, immediately we already know this is a taxable income question. It is a 34-mark question. The taxable income framework needs to come in your mind. Okay. 1.2. Calculate Kate Willow's final tax liability for 3 marks. So we say, okay, quickly, let's think. Part 1 was taxable income. 1.2 is final tax liability. 1.3 says, calculate the medical deduction if Kate had a disability as defined. Okay, so we know 1.3 is talking about medical aid. 1.4, assuming that Kate's actual current contribution to the pension fund amounted to 47,667, recalculate the pension fund. Okay, so if we look at question 1.4, we know that we are talking about pension fund contributions. 1.5, assume Kate's net normal tax amounted to 210,000. Calculate Kate's final tax liability for 2 marks. Okay, the reason we went to the required is because we'd like to get a feeling of what we need to answer in a question. So is everyone happy that we've read the required? We know that the required has now 5 parts. So this is a long question. Now that we've done that, let's start reading the question. Question 1. Kate Willow is 30 years old and not married. The following information relates to the 2014 year of assessment. We have given you all of this information, and in 1.1 we already said calculate Kate Willow's taxable income. So your starting point would be to answer a taxable income question, keeping in mind the taxable income framework. Okay, let's do that. How do we go about answering question? Where do we start? So we're going to write question 1. Remember, it is always best to have your 2 columns, one for your calculations and one for the actual taxable income. You would have already done something similar like this in assignment 2, so it's not the first time that you've seen it. Please make sure that the layout of your answer is clearly visible to us as markers, as it makes it easier for us to mark. Let's carry on. So we're already answering 1.1. So we're already into the required. We're answering a taxable income. We know that we already start with salary. So we've got salary, 550,000 Rand. That can go in your final column. 550,000 Rand. Bonus, retirement funding, 45,835. We immediately know that the bonus can also go in your final column, 45,835. Next one, medical fund contributions paid by Kate. We know it's saying a note. A good thing to always have is a highlighter so that you can make some notes for yourself. So we know that the medical fund contributions has a note attached to it. Let's go somewhere down. Okay, there we go. We found the note. This deals with the medical aid. Let's read. What does it say about medical aid? Kate belongs to a medical fund. Over and above her contribution, her employer also contributes 16,500 per annum to the medical fund on Kate's behalf. Immediately, red flag should come up. You see an employer paying a medical fund or contribution towards a medical fund for Kate. That means there's a fringe benefit. Remember that. Keep that at the back of your mind when you're reading this note. She was a member of the fund for a full year of assessment, and she made contributions for the full year. Kate does not have a disability as defined. Very important as well, because there are different rules. Let's go on reading. Current year pension fund contributions, we have the total. Past period pension fund contributions, 6,000 Rand. Employees tax. Okay, let's move on. investment income, okay? Interest received, South African bank. Immediately when you see interest received from a South African bank, we know that goes in. So we've got interest received, and we know it's from South Africa, and it is an amount of 26,150. Now, for the 2014 year of assessment, we know that individuals, and Kate Willow is 30 years old, remember, so what is her interest exemption that she gets? $23,800. Where did I get 23,800? It's a rule. We know individuals that are less than 65 years in age have an interest exemption up to 23,800. Okay, so we've received interest, South African interest of 26,150. We have an interest exemption of 23,800. Kate Willow is 30 years old. That's where I got it from, because she's 30 years old. Okay, let's work that out. 26,150 minus 23,800. Her taxable portion, 2,350. Let's continue with the income section. Dividends received. We got dividends from South African shares of 26,450. So we've got dividends from a South African source of 26,450. Okay, that's from my question. What do we know about South African dividends as a rule? We know that South African dividends are exempt. And we know that all of it is exempt. So 26,450 is exempt. So nil, zero. This is a very good thing to do in your exam, as exam technique that we're teaching you, is please include the dividends and then exclude it again and show us a net effect. Let's continue. We now received foreign dividends, not exempt from normal tax. So the question is telling you that it's not exempt, it's a foreign dividend, and it's giving you the equivalent in Rand of 6,000. So we've got the foreign dividend of 6,000, and they've already given you the taxable portion, 6,000. Let's continue. Net rental from property in the United Kingdom equivalent in Rand, 150,000. So we've already given you net rental received from UK, 150,000 Rand. Okay. Any more income that I see here that I can include? No. But I told you to keep something at the back of your mind when we read the medical aid note. The medical aid note said that Kate's employer contributed 16,500 Rand per annum towards her medical aid, which is a fringe benefit. So we have that in your income. It's a medical aid fringe benefit of 16,500. And if we take all of that up, I'm just going to take it directly from your solution, which, by the way, you have the solution to this question in your tutorial letter 201, which I don't want you to look at, by the way, right now. Okay, so the total is 770, 685. So that is the total of your income thus far. Let's go on to expenses. So we have qualifying medical expenses paid by Kate, again, relevant to the note. We say we've read that. Kate paid 2,150 out of her own pocket for qualifying medical expenses, and this amount was not refunded by the medical aid. Purchase of software for private computer, 1,500. Okay, let's continue with the expenses. So we say software, private computer. Are these allowed as an expense? No, this is not allowed as an expense. In terms of Section 23M, it is a rule which you need to go and study. Section 23M has been covered in your syllabus. It is not allowed as a deduction. So it's not allowed, nil. Let's go on. In terms of the taxable income framework, you now know the order of the deductions in which you can go and answer this question. Let's go on. So the first one that we need to go and answer is pension fund. Pension fund contributions. Let's read what the question said. The question said that we have a current year pension fund contribution of 41,568. So we had pension fund contribution of 41,568. Notice that I am putting this calculation in my working column. This column is my working column and not my final column. What is the rule in terms of pension fund contribution? You need to know this by now. What are the limitations that is applicable for pension fund contributions? And those limitations are that this pension fund contribution of 41,568 is limited to the greater of 1,750 or 7.5% of my salary, which is 550,000, plus my bonus, because my bonus is retirement funding, which is equal to 595,835. That's the total. 7.5% of that total, 595,835, is equal to 44,688. I need you to please understand this with me right now. I've said 41,568 is the contribution that I have made as an individual to my pension fund for the year. That, for me, needs to be applied to a limit. My limit is the greater of 1,750, or, as per my calculation, of this 7.5% times my salary plus my bonus. I got my salary from here. I got my bonus from here. I added these two up. I got this total here of 595. I took 7.5% of the 595,835. I got 44,688. Which is the higher, 1,750 or 44,688? 44,688, yes, you're right. So let's take 44,688. Can I deduct 44,688? No. Why can I not deduct that even though it's the higher in this calculation that I'm working out? I cannot deduct this full 44,688 because I have only contributed 41,568. Can you ever deduct more than what you've contributed? No, you cannot. So let's go on. So my deduction for pension fund contribution would be the actual 41,568. And that then will be, in my final column, my deduction for my pension fund contribution. Let's go on. So we're done with pension fund contribution. In terms of your taxable income framework, which you've already studied and you should know, what is your next deduction? It is your retirement, sorry, my spelling, retirement annuity. Okay, let's go on. Retirement annuity, oh, sorry, my bad. Little mistake. I missed out something, and you see how easy it is to miss out something. I told you in the question, or we told you in the question, that there's a past period pension fund contribution. I have told you that there's a past period pension fund contribution of 6,000 Rand. As a rule, we know that 6,000 Rand was previously not allowed as past period pension fund contribution, but we know that we are allowed to, in the current year, deduct 1,800 Rand. So before I go on to the retirement, it's less past period pension fund of 1,800. Okay, don't forget that. So not the full 6,000, the 1,800. Let's now go on to retirement annuity fund. Retirement annuity fund, the question says that you have contributed retirement annuity fund contributions of 30,000 Rand. So the same, 30,000 Rand. What are my limitations to the retirement annuity fund? It is limited to the greater of 1,750 or 3,500 minus my pension fund contributions, which was 41,568, which is basically nil, or as the rule, 15% of 727,317. My 727,317 I got from here. It was basically the 770,685 minus the 41,568 minus the 1,800, which was then the 727,317. It was a subtotal. So I take the subtotal minus again my salary minus my bonus. Remember to add back your pension fund contributions of 41,568 and the past period pension fund of 1,800. So if you work this out, as a calculation, you will get an amount of 26,228. Okay, you can go and work this out now on your calculator. So let's apply the limitations. We said it's limited to the greater of 1,750, nil, or 26,228. So what is the greatest? 26,228. We have contributed 30,000 Rand to our retirement annuity fund for the year. As per the question, can we deduct the full 30,000? No, because our limit, maximum limit, as per this calculation, is 26,228. Okay, let's get a subtotal. Take the 727,317, and if you subtract the 26,228, we get 701,089. Okay. At this point, you've got a nice subtotal. I'm going to move over to the next page. Remember again, your two columns, one for your calculation and one for your final amount. Okay, so we left off at the retirement annuity fund. Let's continue in terms of the taxable income framework. So we say less donations. What did Kate Willow do in terms of donations? Let's read. Donation to a public benefit organization in which she's got an official receipt of 12,000 Rand. So we know that donations are always limited to 10% of your taxable income. We know that from the page before that my taxable income was 701,089. Okay, so 10% of 701,089 gives me 70,000. So 10% of 701,089 gives me 70,109 is my limit. So the maximum donation I can deduct is 70,109. Kate only gave a donation of 12,000 Rand. She made a donation of 12,000 Rand. So that 12,000 Rand can be deducted in full as a donation. She has a receipt with her. The subtotal, 689,089. So we're done with donation. What's the next deduction in terms of the framework? Remember how important it is now, as I'm going through this question, how important the framework is. Pension fund, retirement annuity fund, donations, medical. Please go back and study that. If you're losing me, if you're confused, stop right now, go back and study these sections, and then come back to this question. Okay, less medical deduction. Okay, we know that medical aid had a beautiful note. We need to go back to this note and read. Kate belongs to a medical fund. Over and above her contributions, her employer contributed 16,500 per annum. So we look at total contributions Total contributions, 16,500 for Kate's employer. How much did Kate contribute to the medical aid? Let's look. There we go. If we look at the top and we look at the IRP5 summary, medical fund contributions paid by Kate, they're telling us that Kate actually contributed 16,500 as well. Okay, so my total contributions are 16,500 plus 16,500, which is equal to 33,000. Okay, we also know as a rule for medical aid that this 33,000 is limited. It has a limit. And that is your medical tax credit. It's basically what's allowed to an individual. So Kate is one person. She's an individual. She's 30 years old. She is allowed for the year 242 per month. That's for 12 months now. Okay. So 242 times 12 is 2,904 for the year. That's her limit that she's allowed, but we times that times 4, okay, for her medical aid. So she is only allowed to deduct 11,616 of that 33,000 rand. So what is her excess contributions? It's 33,000 that we've got, which is the employer's contribution of 16,500, her contribution of 16,500, 33,000 rand. Are you happy with this 33,000 rand? Where did I get this limit of 11,616? It was the 242, which is a rule. That's what you get for the year as an individual, times 12 months, times 4, 11,616. So my excess contributions, 21,384. To this excess contributions, so I will call it my excess contribution. To this excess contribution, you need to add all qualifying medical expenses. Qualifying medical expenses. I remember reading something in a note about qualifying medical expenses. Kate paid 2,150 rand out of her own pocket for qualifying medical expenses, and this amount was not refunded by the medical aid. So let's add this 2,150 to the excess contributions of 21,384, 23,534 is what we want to now try and claim as a deduction, but it's not going to be allowed in full. There is, you've got to say that only in excess of or as exceeds 7.5% of the subtotal before 689,089 will be allowed as a deduction, which is basically 51,682. So if you take 7.5% times 689,089, you get 51,682. Anything over and above 51,682 for medical aid will be allowed as a deduction. So if her total contributions at the moment, which means it was her excess contributions plus her qualifying medical expenses, came to 23,534. Is it over and above 51,682? No. So we will have nil allowed as a medical aid deduction for Kate in your final column. Remember, these are steps that you have to follow when you are calculating or when you are trying to get to what the deduction is in your final taxable income column. You've got to take employer's contribution plus Kate's contribution, apply the limit, get the excess contributions, add the qualifying medical expenses, get a total medical aid contribution. Then we say as exceeds 7.5% of the taxable income, any amount over and above 7.5% of that taxable income would have got a deduction. So at this point, we're at nil. No medical aid deduction allowed for Kate. Her final taxable income as we stand, 689,089. In terms of the taxable income framework, let's think. Is there anything else? Is there anything else in the question that I didn't go through? If we start looking through, it looks like we have covered everything except for employees' tax. But that, because we've read question 1.1 to 1.5, we know that that will come on later on. And students, this has completed 1.1 of your required, which said, please tell me or calculate Kate Willow's taxable income. So her taxable income for the 2014 year of assessment, and that is her taxable income for the 2014 year of assessment for 34 marks. Okay, so we've gone through the steps. I've got you to taxable income. I'm going to do now question 1.2 with you. Start it on a new page. Question 1.2. Let's read the required quickly again. Calculate Kate Willow's final tax liability. So now we're saying final tax liability. It's obviously different from taxable income. And we know now it's 3 marks. Okay, so it can't be that long. Okay, 3 marks only. So Kate Willow's taxable income. Let's just write this down. We know what is a final tax liability and how do we get to it. So her taxable income from the previous page that I had there with you was 689. Let's look at it. 689,089. 689,089. Okay. Her final tax liability. How do we get, what does final tax liability mean? It means you've got to calculate her tax payable or tax refundable. Okay. Tax as per tables. Okay. Now, when we say tax as per tables, it is imperative. It is important. I cannot emphasize anymore how important it is that you know how to use the tax tables applicable for individuals for the year of assessment. This cannot be the first time that you're referring to the table or you're going to be referring to the table. So I'm going to take you through how to use the tax table in this discussion. But please, I need you to know how to do this before you enter an examination. Okay? The tax tables will be provided to you in your schedules in your exam, but if you've not applied it before, it's very difficult to, for the first time, have to use it. Okay? So now we have someone who's got a taxable income of 689,000.089. Okay, tax as per tables. If you go to your tax tables, which you're always given, in your schedules and in your tutorial letter 101, and it will be given to you in your tutorial letter 201, you've got tax rates for the individuals for 2014. You have the solution in front of you, so you can just walk through with, you can walk through with me on this. Okay, we have 689,089, and as per the tables, I'm reading this off the, from the table, students. Okay, times 40% plus 185,205. So if you do this calculation, Kate Willow fell in the bracket of this. This was her bracket of 40%. If you look at the tables and the bracket in which she fell off because of her taxable income, this is where she fell, and her tax calculated at 205,401 as per the tables. You can go and do the calculation, the maths. Okay, we say less a rebate. Remember, we are calculating her final tax liability. Kate Willow is 30 years old as per the question. Remember, a rebate applicable to an individual less than 65 years old for the 2014 year of assessment. That you have to know as well. It's a rule, 12,080. Less your medical tax credit Remember above when we were doing the medical aid deduction, we said that each individual gets 242 times 12. So it was 242 times 12, and that is your credit, 2904. Please do not get confused here, because at this point you do not multiply it by 4. The multiplication of, or the 4 times this credit is only applied when you're calculating your medical aid deduction in your taxable income. So remember that. When you're doing your tax liability, it is only times 12. It's for the year, not the times 4. Okay, 2904. And then we get a subtotal. So if we take 205, 401 minus 12080 minus 2904, we're looking at 190, 417. Okay. I did tell you that there was something in the question which is applicable, which we didn't use, and this is where it comes in, the employee's tax less employee's tax. Remember, you've already paid employee's tax of 200,000. It's already been paid over. So, what is your final tax liability? It is a tax refund of 9583, because you were liable for 190,417, but you've already paid 200,000 Rand. So you have a refund of 9583, and that is part 1.2 for 3 marks. We've just answered that. Okay. If we go to question 1.3, right down to question 1.5, I need to please say that if you look at question 1.3, we talk about medical deduction, somebody who's dealing with a disability, for example. If we look at 1.4, we're talking about actual pension fund contributions in a different scenario. And if I look at question 1.5, it's talking about Kate's normal tax amounted to 210, and also calculating whether she has tax payable or refundable. All of these principles in question 1.3, 1.4, and 1.5, I have already addressed these in question 1.1 as part of your big taxable income framework, and we have addressed some of it in question 1.2 when I've answered this. Question 1.3, 1.4, and 1.5 has been given to you with different scenarios and different numbers. So I suggest that you now go and you attempt 1.3 to 1.5 on your own. They're very short questions for 2 marks, 4 marks, and 2 marks. Please go and attempt this. I have already done the principles with you in 1.1, and I am sure and have no doubt that you will manage this on your own. You have a solution in front of you. You have access to the lecturers at all times. So if there's any questions or if you're not understanding it, you can always refer to the solution, refer to my discussion in question 1.1, which was the big chunk for 34 marks, and try and understand the principle when answering 1.3 to 1.5.